What's up guys, Ben here and welcome to Motivation to Invest. Uber is a true disruptive technology business. Its ride-hailing business disrupted the taxi industry and its Uber Eats business disrupted the food delivery industry. With the talk of autonomous Robo Taxis and even flying cars, could Uber become the next Tesla and will its stock price follow suit? In this video we're going to find out as I deep dive into Uber's stock and analyse the fundamentals. Let's dive in. Welcome back guys to Motivation to Invest. Before we get started, go ahead and give this video a big thumbs up. That really helps out with the YouTube algorithm, which allows me to create more great content like this for you guys. In addition, if you want more stock investing tips and exclusive stock picks, which I personally am investing into, then you should definitely subscribe to this channel and be sure to turn that notification bell on. With that being said, let's get into the video. The days of hailing taxis are over. These days, we just fire up the Uber app, send the nearest driver, and we can track exactly when and where the driver is heading to. Afterwards, we pay the driver through the app and give them a nice review. Anyone can sign up to be an Uber driver, so it really does give power back to the people, allowing them to earn some passive income. Great billionaire investor Warren Buffett looks for businesses which have strong brands and that are embedded into the psyche of many customers worldwide. A great tip I use to see when a business's brand is at this level is when its name becomes a verb. In other words, these days people don't say, "Get me a taxi," they say, "Get me an Uber." The same way people don't say, "Search this on the internet for me," they say, "Google it." And they don't say, "What are you watching on TV?" They say, "Oh, shall we Netflix and chill?" I find once a brand passes this threshold and becomes part of our general day-to-day vocabulary, then it has true brand power. So we all know Uber has a great product and a great brand. And together, these have helped Uber to become the #1 ride-sharing service in the entire world. But there is one major downside, one big elephant in the room. Uber is still not profitable. And in 2019, it lost over $1 billion. Uber's much anticipated IPO was a disaster, with its stock sliding to $29 per share. These days, it sits around $31 per share. So why isn't Uber profitable? Well, there are many reasons why Uber is not profitable. So let's go through a few of them here. Simply put, revenue minus costs equals profits. So it's clear that Uber has more costs than its revenue. Looking at this graph from a few years back in 2018, it's clear to see what is going on. So its operating costs actually add up to a total of $2.2 billion. Put that onto a profit before these costs of $1.5 billion, and you can see that Uber was losing $700 million in Q2 of 2018. And since then, the situation has actually got worse, with Uber reporting a loss of $8.5 billion in 2019, but it thinks it can get profitable by the end of 2020. But what can Uber actually do? Can it pay the drivers less? Can it move into other avenues? Can it gain more market share? Uber is trying all these things on its path to profitability. The good news is, a major competitor of Uber's, Lyft, is actually not profitable as well. So they're both facing the same challenges on how to make this disruptive technology taxi service become a profitable business. It doesn't help also that Uber actually have run into a lot of controversy and battles. For example, in November 2019, Uber lost its license to operate in London thanks to fraudulent drivers. TfL actually found that unauthorized drivers were using accounts of approved Uber drivers and picking up passengers using vehicles that they weren't registered to drive. TfL also discovered that some of these Uber drivers weren't even insured or licensed. This was really bad press for Uber as a business. The CEO of Uber commented, "We understand we're held to a high bar, and we should be, but the TfL decision is just wrong. Over the last 2 years, we have fundamentally changed how we will operate in London. We have come very far, and we will keep going for the millions of drivers and riders who rely on us." Uber has lost its license previously and it got it back. So Uber promised to appeal this decision. And from researching online, I can't find any details on the outcome of that appeal. Then of course we have the food delivery service Uber Eats. Food delivery is one of the most competitive industries on the entire planet, with various numbers of competitors popping up across every city in the US and every country in Europe. North America is host to over 10 online food delivery companies, with Grubhub being the largest player, accounting for 1/3 of the share of the market. Europe also has over 10 providers, with a Dutch company Just Eat having a presence in 8 countries in the region, and over 83% of the market share in the UK. But in terms of sheer numbers, Asia accounts for a massive 55% of the global food delivery market, thanks to the Chinese dragon's seemingly insatiable appetite. But in terms of growth, Uber Eats, launched in 2014, has grown astronomically compared to the other brands. Uber Eats itself is currently valued at a healthy $20 billion and registers revenues of $1.4 billion annually, and has a presence in over 670 cities on 6 continents. Uber Eats delivers almost 1 billion meals every single year. One unique selling point of Uber Eats compared to these other food delivery apps is that Uber Rides drivers can actually switch between becoming an Uber Eats driver and a Rides driver. This allows them to get 2 forms of income, but also allows Uber Eats to leverage this massive taxi network. The food delivery industry is expected to grow to over $200 billion by just 2025. This trend has been accelerated by the global health crisis and subsequent lockdown of the entire planet. People would rather not go out to a restaurant and risk getting ill when they can just sit in their comfy house and have the food brought directly to their door. But the food delivery market is still hugely competitive, so can Uber Eats continue to grow? This is the Hunger Games.
Wish you happy Hunger Games, and may the odds be ever in your favor.
To help consolidate Uber's market share, it has announced it has acquired Postmates for $2.65 billion in an all-stock deal. This will allow Uber Eats to keep the Postmates apps running while merging some of the tech and delivery options at the back end. For example, by having drivers delivering orders for both businesses. From this chart here, as we can see, monthly sales for June 2020, Uber Eats captured 24% of them, DoorDash captured 45%, Postmates 8% and Grubhub 22%. So if Uber Eats has now purchased Postmates, then we can assume that they will capture at least 8% more of this market share, taking them up to 34% market share. However, Grubhub is to be acquired by Just Eat Takeaway for $7.3 billion. Looking at the Hunger Games battle for the cities, we can see in New York City, Grubhub had 52% of the sales, Uber Eats had 25% and DoorDash had 21%. In LA, Postmates had 37%, Uber Eats had 16%, DoorDash 30%, and Grubhub 17%. So with this recent acquisition, Uber Eats will have a massive 53% of the market share in LA, which is incredible for such a highly populated city. In the battle for Chicago, Grubhub currently has 33% share, DoorDash 37%, and Uber Eats 27%. With the acquisition of Postmates, Uber Eats will roughly get 1/3 of the market share for the city of Chicago. Uber Eats has a large presence in Miami already, with over 61% of the market share. With the acquisition of Postmates, this will bring it up to 76% of the market share. So Uber Eats has won Miami. But as you saw from the graphs, the fierce Hunger Games goes on. City after city, country after country, battling for the stomachs of everyday citizens such as me and you. Following the acquisition of Postmates, Uber is confident that the acquisition will help it to become profitable by 2021, even though its ride-sharing business continues to struggle amidst low demand during the COVID pandemic. Uber also has plans to go into the grocery delivery space, so you can use Uber as a ubiquitous service. You wake up in the morning, you order yourself an Uber taxi to take a ride to work. Maybe you use their ride-sharing service to help get around the city throughout the day. When you get home, you use Uber Eats to order your food, and then Uber's corner shop service to order your groceries and deliveries. The management of Uber believes over time the customer will form habits and trust with Uber's brand. Uber's hoping that its research and development into automated Robo Taxis will pay off, allowing it to not have to pay its drivers at all.
Hello, I'm Johnny Cat. Where can I take you tonight?
Drive!
Would you please repeat the destination?
Oh, anywhere, just go!
Please state a street and number.
Shit!
I'm not familiar with that address. Would you please repeat the destination?
But of course there'll be running costs for such automated robotaxi services. And to be honest, I'm personally sceptical on whether this will come true, at least within the next 10 years. On a more practical side of things, the acquisition of Postmates may allow Uber Eats to gain a vastly more market share in the food delivery space. Thus, economies of scale should have Uber on the fast track to profitability. Dive into the numbers here, we're on the Stockopedia platform. It's clear that Uber has had a fantastic growth on the revenue of 95.5% compounded annual growth rate on average, growing to over 14 billion in 2019 and predicted to grow to over 18 billion for 2021 in revenue. But its losses are also increasing, which is the major issue for Uber. Its current ratio, 1.68. Revenues forecast to increase. Net income is forecasted to increase over time. So generally, looking at the analyst consensus, they still say 20 buy, 12 strong buy, 6 hold, 1 sell. And I think the reason for this is due to the strong brand power of Uber and the fact it's a disruptive technology. So once it can turn a profit, this could mean big returns for shareholders. But it's extremely risky. Looking at the discounted cash flow valuation for Uber, we can see that it's currently 55.2% undervalued at its current share price of $30.99. And it says here its fair value should be $69.20. Now that's looking at the free cash flow of the business. There has also been some insider purchases. So on the 17th of June, Robert Eckert, an independent director at Uber, actually purchased $497,000 worth of shares at $31.60 per share. So today it's less than this amount. However, there was a lot of sell-offs, but not from people on the board. So Jill Hazel Baker sold shares, vast amounts, 8 million there, 1 million there, 20 million there, Expert LLC. So these are companies that just haven't got faith in the business. However, the CEO, Dara, he spent nearly $7 million on shares in 2019 at $26 a share. So he's obviously got faith in the company. So there's a real mixed bag there of insider transactions. Overall, I believe Uber is an extremely great business and a very strong brand. However, its lack of profitability does make it a major risk for investors. It reminds me a lot of Tesla a few years back, when its lack of profitability put a lot of investors off. However, as soon as it started turning profits every quarter, the investors flooded in and the stock skyrocketed. So could Uber do the same by capturing more market share and benefiting from the economies of scale? This is a classic high risk, high reward tech stock. The business could easily go bankrupt if it doesn't manage to turn a profit anytime soon. However, on the plus side, as soon as it starts turning a profit, the investors will flood in and the stock will skyrocket. So have I bought shares in Uber? Well, personally, I've bought a very, very small stake in Uber just to track the stock more closely. I'll be keeping a close eye on it, and I will be increasing my stake in the company should it start turning a profit. So what do you think of Uber as a business and as a stock? Do you think Uber Eats will become number one in every city in every country? Do you think its ride-hailing service will turn profitable? And do you think it will have Robo Taxis? Let me know in the comments below and I'll join in the discussion. In addition, if you enjoyed this video, go ahead, smash that like button for the YouTube algorithm. That allows us to continue creating more great content like this for you guys. In addition, if you would like more investing tips and exclusive stock market picks, which I personally have invested into, then you should definitely subscribe to this channel. Thanks for watching, guys, and I'll see you next time.